Now, we all can see that a potential real estate market crash is coming, and I want to share with you how you can actually be protected. That's right, you can buy properties now, invest in money-making rental properties, and still be protected from the potential crash that's coming. Hey guys, my name is Dustin Heiner with Master Passive Income, and I want to show you how to quit that JOB, that just over broke job, by investing in real estate rental properties so you never ever have to work a job again. Now, we can all see that the price of homes are getting higher and higher and higher. If you remember anything from 2008 and that crash when there was a real estate market bubble bursting, we actually see how prices literally just dropped in half almost. And even with that crash, you know what's crazy? I was buying houses in 2006 before the crash, and I still made money. Even though the crash happened, I still made money every single month from the properties that I owned. So I started investing in real estate in 2006, and whether the market went up, went down, or went sideways, didn't go up, I made money. And I'm going to give you some keys on how you can invest in real estate and not lose if and when there's a crash. We don't know if there's actually going to be a crash. We can potentially see that something's coming, but at the same time, we want to make sure that we're still investing. We're still putting our money to work. You see, what we do is we buy single family homes. That could be a 4-unit and below, 4, 3, 2, or 1 unit. But we buy the single family home and we rent it out to tenants. We rent it out to long-term tenants that pay us money. And what we do is we calculate all of our expenses, and then we have the income, how much money we make in rents. And that difference there is our passive income. And we try to shoot for $250 a month in passive income every single month. And that's how I was literally saved while I was investing in 2006, 7, and 8 before the crash. Then the crash happened. The value of my homes just literally just cut in half, but I still made money. $250 a month in passive income. That's the minimum. I have some properties making me $500 or $600 a month in passive income, even though I bought them in 2006 and 2007. And in 2008, with the market crashing, going down to basically cutting the value of my homes in half, I didn't sell the houses, so I didn't lose any money. If I would have sold them, I would have lost that money. But I didn't. I held on to them, and now the price is right back up above what I actually bought it for and way above that. So I'm actually way ahead. So I want to give you some principles. There's really some do's and don'ts of what you should do to invest to protect yourself, because you really should get started now investing, not wait, like tell yourself, you know what, I'm just going to wait until there's a crash before I actually start investing. Well, I actually created an entire video, check in the description for that video, where I walk you through how and why you should invest now before there's a crash, because we don't know if there will be a crash. That's one little giveaway point. We don't know when there's going to be a crash, because in 2017, I thought there was going to be a crash, and there wasn't. There still hasn't been. It might be 10 years before a crash or a correction. So check out that video where I share why you should start investing now. And now this video is to share with you how to invest now to protect if there's ever a crash, because there may never be a crash. And I also want to know if you guys think there's going to be a crash. Please leave in the comments below if you think there's going to be a crash. I think in the next maybe 2 or 3 years, there's going to be a correction or a crash. But I want to know, is there, in your opinion, and what reasons do you find that there will be a crash? So leave in the comments below. And you guys also don't forget to subscribe and like this video. I want to keep giving you more and more real estate investing content. Now, let's jump into how you can protect yourself when you're investing before something like a crash coming. I know many investors who were investing in 2005, 6, 7, and 8 before the crash, and then the crash happened and they literally went broke, like bankrupt. They lost their shirt off their back. They literally had to start over. Well, I didn't. I literally still made money every single month in passive income because I invest for passive income. Now, you don't want to be that type of person where you're investing and you lose your shirt if there's a correction. Now, here's the first don't. You do not want to invest for appreciation. Appreciation is where you buy the house here, let's say $100,000, and you're hoping that it goes up to $150,000, and then you're trying to sell it. Well, that's hoping, that's speculating or guessing that the market's going to go up. If that's your plan and you're not making passive income, you will absolutely lose money because let's say it's $100,000, it's cut in half to $50,000. Well, shoot, you're not making passive income. You lost $50,000. You sell, you literally go bankrupt, or you walk away from the property, which a lot of investors do. The second thing that you need to do when you are investing to not get hurt in a real estate market crash is to not get overextended on mortgages. You don't want to get a mortgage that's going to be costing you $5,000 a month. Well, if the market goes down, you still have that mortgage you got to pay. And what we do here at Master Passive Income is we don't get overextended on mortgages. We make sure that our tenants pay our mortgage. We make sure that our tenants pay for everything, and we make passive income. See, I don't pay my mortgage. I don't pay my insurance. I don't pay my property taxes, my property manager fee. I don't pay any of that stuff, even repairs. My tenants pay all of that. And on top of that, I make money in passive income, minimum of $250 every single month. So you don't want to get overextended on a mortgage and not be able to pay that because you don't have a tenant in there, or a tenant's not paying enough to pay for that mortgage. So don't get overextended in a mortgage. And I actually want to show you how to invest in real estate like I do, like all my students do. Get my free real estate investing course. Go to masterpassiveincome.com/free course, or check in the link in the description, masterpassiveincome.com/free course. I will literally give you the free course showing you how to find properties, find a new area of the country to invest, even if you live out of state, how to get financing, how to run the business right, how to quit your job with that. Another huge thing that we do as investors is we do not overpay for a property. In fact, we don't even pay market value for the property. You know, what's funny is a lot of people that I start to coach, they start to think, well, the house, they're asking, let's say $120,000. They tell me, well, what should we offer? And I ask them, well, what do you think we should offer? Because my goal is to teach my students how to fish, not just give them the fish. So I ask them, what offer would you put in? They say, well, like 125 because it's a really hot market right now. I'm like, no, that's the exact opposite. We do not put in offers for asking price or more. Now, if it's a good deal, we might, but we love to capture equity. So we do not overpay for a property. We're investors. We're looking for good deals. We use realtors, we use wholesalers, we use other investors, we use everybody and anybody that we can to find good deals. In fact, one of my favorites is wholesalers. I love using wholesalers because they find great deals for me well below market value. So even if there was a real estate market crash, I would absolutely be protected because I bought the price of the home so much lower than what it was actually worth at that time. Now, let me jump into the do's of real estate investing, what you should do to protect yourself if there is a real estate market crash. Now, remember, like I said, we invest for passive income, not appreciation. So in the passive income, we want to make sure we make $250 every single month at minimum. That's the bare minimum. And what you do is you calculate all your expenses and you have your income. Well, you subtract the two, that difference is your passive income. As long as you're making $250 or more every single month from these rental properties, you're going to do really, really well. In fact, that's how I feed my family. That's how we have a roof over our heads. That's how we're able to do whatever we want, is because we have that passive income. So when you're investing, you want to not invest for appreciation where the value goes up over time. We want to make sure that we're getting our tenants to pay all of our expenses and pay us money. And here's the great thing. They're actually going to be paying our mortgage for us. If you buy a house, you're going to put a down payment. That down payment is only money that you're putting in. All the principal and interest that you get on that mortgage, your tenants are paying that. Isn't that fantastic? So you're going to be able to, instead of have a big mortgage that you're paying out of your pocket, you got to work 9 to 5 job, that just over broke job, to pay off this mortgage. No, you have your tenants doing that, and they're getting a good place to live in. And you are collecting that money, making passive income, and they are also paying off your mortgage. And another way that you protect yourself when there is a real estate market crash and you're investing right now is to capture equity when you buy the property. See, now there's a saying, and it goes, you make your money when you buy the property. You realize the money, which means that you put it in your pocket when you sell it. So you make it when you actually buy the property. If the property's worth $100,000, but you pay $150,000, you overpaid by $50,000. It'd be like going to a store and buying something off the shelf and overpaying for that product. We don't do that as investors. In fact, we negotiate. And so as investors, what we do is we negotiate the price down. So if they're asking $100,000, we might start at like $75,000 and offer $75,000. Now you might be thinking, oh man, that's such a low offer. Well, we're not twisting their arm or breaking their legs or forcing them to actually give us the property for $75,000. Who knows? They might need it. They might owe zero on it, and they might be thinking, man, as long as I get $50,000 out of it, I'll be happy. But the realtor talked them into putting an offer in for $100,000 or for the asking price. And instead of doing that, you put in $75,000, like, you know what? That's a good offer. Let's negotiate. Let's come down to $80,000 or $85,000. You come up a little bit, they come down. Eventually, you get a good deal where off the regular price of $100,000 being the market value, you are much lower than that because you negotiated down. So us as investors, we make our money when we buy the property. We basically capture equity. Equity is how much value is in the property subtracted about how much we actually owe. If the home is worth $150,000, but you only owe $100,000 because that's what you paid, you have $50,000 in equity. That's basically like a bank account with $50,000 in it. Now, you would have to take it out to buy some properties to make some money on it, but we capture equity when we buy the property. You've probably heard me say this all the time, but it's absolutely true. The people who do this when they're investing, they make money. But the people who don't, they lose money. In fact, I love buying properties off people who don't do this because they get fed up and they're like, man, just take this property. I really don't want it anymore. I'm like, please, thank you. I'll go ahead and take it. What you do is you want to build the business first. Build the business first before you buy a property. See, now what people might say is, well, you buy a property, you make money on it in passive income, and that's your business. That property is your business. No. In fact, that's backwards. What we don't want to do is buy a property and hope that it makes money. We build the business first. We trust experts, people who live in the area, property managers, contractors, realtors, inspectors, wholesalers, plumbers, roofers, literally everybody. They're the experts living in the area. They're going to tell us how much it could rent for, how much it costs, or the actual value, and they're going to tell us how to get tenants in there. They're going to take care of everything. So you need to build the business first. And I have a whole nother video on how to build the business first. Check in the description or watch this video right over somewhere there. But watch that video where I show you exactly how to build the business first. Because if you do these things, you're going to be protected when there's a real estate market crash, and you're going to be investing well. And in doing these things, you're going to protect yourself from the real estate market crash and invest at the same time, making $250 a month in passive income every so much. Watch this video right here. Subscribe to my channel. I'll see you guys in the next one.